The third company we're looking at today is Halliburton. For more, Brooke Sutherland, Bloomberg Opinion columnist, joins us now. Halliburton.
Halliburton off to a pretty good morning, up about 2% in the pre-market. And, I do want to point out this chart on my terminal. If we can take a quick look, Halliburton was, as you mentioned, the worst performer on the S&P 500 over the past 12 months. So it was also a matter of things could not really get much worse. You talk about setting a low bar with Deutsche Bank. The bar was pretty low at Halliburton as well. So they are, beating expectations on second quarter adjusted earnings so far this morning. Revenue came in about in line, echoing the comments we heard from Schlumberger at the end of last week that international growth they expect to be relatively good over the course of this year, up single digits. North America continuing to struggle, but a little bit more sanguine on that front than what we heard from Schlumberger. It's going to be interesting once we get into the call to hear what their outlook is this year. Capital One pointing out that the earnings beat was actually driven by better margins in their unit that houses fracking. So that suggests that maybe they're getting a little bit more pricing power back there. Maybe concessions weren't quite as bad as feared.
Which is really interesting because the efficiencies for shale players, for example, are moving from actual drilling now to fracking. So it's called top hole, down hole. It's moving from top hole to down hole. And if they're able to get better margins while that's where the companies are seeing more efficiency, that is a definite that could be really good if it's sustainable.
Right. And some of the argument is, well, the oil field services providers have also consolidated over the past couple of years, and maybe that's helping out their pricing power. They've also made efforts to cut back on spending, to improve efficiency, and maybe they can keep pace with the cuts that you're seeing at frackers. Again, to be determined whether or not that actually holds.
But a shift from U.S. shale over to overseas, is that right? Mm-hmm. That's where it's going?
Mm-hmm. That's where it's going, in part because costs have come down so much. Yeah. So it's now a lot cheaper to drill in, say, the Gulf of Mexico or in other deep water areas than it was even 5 years ago. It's gone down so much, like $30 a barrel or something. So you can do it now.